this is gonna be my funded strategy, how I was able to pass multiple funded accounts, how I'm able to get multiple payouts. So let's get into it. So as you can see, I'm having these 3 major confirmations, major confluences, because I like to keep it in simple. To me, simplicity is key. So yeah, let's get into it. So first one is higher time frame bias, second one is key levels, and third one is lower time frame structure shift. I'm gonna explain it now. Let's go. So higher time frame bias, which means I'm gonna be identifying my swing high and swing low. I'm gonna be doing it on daily and H4 time frame, and I'm doing it and I'm trading like this because I'm trending with the trend. I want to go with the flow. I don't want to go against it, against the big boys, against the big money. Okay, so yeah, higher time frame bias. So as you can see in this example right here, we got our swing high and swing low, swing low, swing high, and swing high and swing low. Basically, this was that H4 time frame, where I'm gonna go on a chart as well, but I'm just gonna give you guys a little preview how it works. So this was our swing low and swing high, pullback phase, and this was our new swing high. So how I know this swing high is valid, it's considered as a new swing high, is when previous swing high right here is broken with at least one full candle. Okay, one full candle. Which means if price is trending right here and price do one bullish candle right here but not fully closed, and then price do bearish candle again but under the swing high, that means this is invalid, it's not broken, the key level is still valid and swing high is still this. What I want to see, what I need to see on that H4 and daily time frame when price is trending at this swing high is one candlestick, let's say half, and another following candlestick will close fully with the body above that level, which means that is a new swing high and the break is valid. Okay, the same thing is with a downtrend. If price gonna close, let's say one candlestick bearish, one candlestick bullish, that means it's not a valid break. If price will close under the swing low, at least one full body closure or more, that means that is a swing low, valid swing low, and I can continue from there. Okay, so if I go on chart, okay, so yeah, let's mark them out. Let's mark them out for you guys to understand. Okay, let's start out. Let's say right here. So this was my swing low, this was my swing high, and again, how am I drawing these swing highs and swing lows? I'm drawing them based on candlestick closures. Okay, not wicks, but candlestick closures. So candlestick closure 1, candlestick closure 2. This is a swing low. This is a swing high. So this is a swing high and swing low. And another thing as well, what I need to know, because sometimes price will do something like this. I'm gonna show you. Sometimes price do something like this, and yeah, then do something like this. For me to be able to count this point as a new swing low, new high low point, a valid one, it needs to pull back at least 38.2%. So that's why I'm using Fips for this, because if price doesn't pull back at least 38.2% and it pullbacks less, let's say 20%, that is not a valid pullback, that is not a valid swing low, which means all this is one push. So what I'm doing is, okay, at this point this is a swing low. This is not a swing high because price doesn't do at least 38.2%. So I'm extending my Fips. Is it 38.2%? No, it's not. It is 38.2%. No, it's not. Okay, price pullback right here, 50%. Which means at this point, this is my valid swing high, this is my wallet swing low, and I can go from there. Because as I said, a lot of the time you will see price doing these 15-20% pullbacks, but the thing is it's not valid as a structure point. It needs to be at least 38.2%. So if I use my Fips when price broke this previous low with 1, 2, or at least one full candle, and I'm gonna use my Fips, that means price pull at least 38.2%, which means this is enough and significant enough pullback for me to see, which means that is a valid structure point. Okay, so then if I continue, price goes up, break one second candle above this previous level, previous swing high, which resulting this as a new swing low, and when price is gonna stop, it resulting as a new swing high right here. Okay, so that's with the swing high and swing low. I hope you understand. As I said, I'm drawing them on H4 and daily time frame. Pullback needs to be at least 38.2% for it to be counted and valid structure point. Okay, higher low or lower high, depends on the trend. So that's the main thing. Identify my bias, H4, H4 daily time frame, swing high, swing low. Okay, so the second thing, guys, is key levels. Okay, key levels, I'm drawing them based on reaction, what price did in the past. I'm drawing them based on daily, H4 and H1 time frame, and I'm also drawing previous structure high and previous structure low as my key level. Let's go on the chart. So as you can see, we got marked out our swing low and swing high on this example. Okay, now as I said, I'm drawing my key levels based on reaction what price gave me in the past. So I can, let's go in the past, and I can draw some key level like this, because as you can see, price reacted from it right here, even right here, even right here. So that's a strong key level for me, and also it's lining up with this level. As you can see, this wasn't broken because price broke it only with a one candle, second candle under, and immediately goes down. So that is a one key level. Let's mark out as white, and let's see in this swing low, swing high. That's actually the only key level what I'll be looking for, and also what this key level is lining up with is previous structure high and previous structure low. Because guys, what price tends to do is when price is trending, price tends to retest previous structure highs and previous structure lows. Okay, I'm gonna draw the example for you guys to understand. Price tends to test these previous structure highs and these previous structure lows. That's why I'm using them as a key levels. Okay, because when price is trending, price really likes to test these as a potential support, as a potential new found higher low in this uptrend, and from these the price likes to continue higher. So in this case, that was exactly what happened. Okay, price broke previous broke structure right here to the upside, made a pullback right here, and established itself as on this previous key level and on this previous structure high, previous structure low. So in this case, if I would continue with this price broke structure right here when this candlestick close above it, which means this is my new low, swing low. This is my new swing high. Okay, so I'm gonna be drawing my key levels. Okay, so first key level is gonna be right here, which is previous structure high, previous structure low. Also want to see pullback at least 38.2%, because as you can see, price gave me some pullback right here. It wasn't 38.2. Price gave me some pullback right here as well. It wasn't 38.2. Price gave me some pullback right here. Wasn't 38.2, which means I need to see pullback at least 38.2% for it to be considered as a valid higher low point, which means price needs to pull back at least right here for me to be considered this as a lower high point, valid higher low point. Okay, so yeah, this is one key level, and as you can see, we are trending basically kind of out of nowhere. So what I'm doing, I'm gonna go on the past and I'm gonna see if we got some kilos in the past. And we got, based on what? Based on reactions, what price did in the past. And I can draw it right here. And I go in a present moment. And this previous key level, guess what? It lines up with this 38.2%. So what I'm gonna be looking for is to price. I'm bullish, okay? I'm not going against the trend, as I already said. I'm gonna be looking for to price at least comes here and give me that lower time frame structure shift, or comes here and give me that lower time frame structure shift. Potentially, if price wants to break lower, this is another key level I'll be looking for to take buys. To price gave me this lower time frame structure shift, which I'm gonna be explaining right now. So, lower time frame structure shift. Okay, guys. So, higher time frames bias needs to be clear, because if they are not clear, the lower time frame structure shift is not valid. If I'm 50-50 for the bias I'm not trading it, okay? Lower time frame structure shift is based on H1, M30, and M15. Entry time frames H1, M30, and M15, because I'm using lower time frame structure to enter as well. So let's go into it. So if I'm gonna use this previous example, let's say, because it already happened, that means this was our swing low, right? Right here. This was our swing high, right here. Body closures right here, body closures right here. And this was our key level, which also lines up with a previous structure high, which is right here, okay? Previous high, then price broke structure, pullback, previous structure. Now, when price is giving you a pullback, price is switching trend on these lower time frames, because as you can see on H4 we were clearly bullish, right? But if I zoom on M30, zoom out, as you can see, price is trending bearish right now, okay? Price is trending bearish, and instead of higher highs and higher lows, price is giving us lower highs and lower lows, which I don't want to see if I want to buy. So what I want to see for me to be able to buy is lower time frame structure shift, which means this bearish trend needs to flip to be bullish for me to have all time frames in sync, and I'm going to be able to ride this price to the upside again. Because if you have all time frames bullish, it's a way bigger probability price is going to go bullish than price is going to go bearish, okay? So that's why you want to go with a trend all the time. And as you can see, this push right here was break of structure, and price broke this previous structure point, which means after price close 1-2 candle, let me zoom in a bit, price 1-2 candle above this candlestick closures, okay, 1-2-3 candles, that indicates me price broke structure on the lower time frames, which means price is ready to go higher, because on daily, on H4, I'm still bullish. I'm only bearish on these M15, M30, H1 time frames. And I'm applying exact same thing, okay? So I'm drawing my internal key levels, because right now this is my internal structure, okay? This is a swing structure, which is a swing low and swing high on daily and H4. This is internal structure on H1, M30, and M15. And when I see this internal lower time frame structure shift, we are ready to go up basically. So I'm going to be drawing some key levels as well, where I can potentially take a trade from. So in this case, what I would do, you can see this double bottom pattern on this previous H4 structure. And when price broke it, what I would do immediately, I would set my buy limit on this structure point, on this double bottom. I would set my stop loss under the internal structure low. It is right here. And I'm gonna target swing high. Okay? Because if I'm gonna draw you guys these examples for you guys to understand it better, okay? So let's say this is a H4 time frame, okay? This thing is a H4 time frame. And right now I'm gonna be drawing M30 time frame. Because we got trends in trends. And for our bias, that's why I'm using the higher time frames, daily and H4, because the lower time frames are the noise if you are looking for a trend, okay? But if you are looking for entry, the lower time frames are giving you a hint where the higher time frames is ready to push up. Because let's say this was a H4 time frame on the left, but on the right we got M30 time frame and price is doing something like this, okay? Which looks price is trending bearish, but I know on H4 time frame I'm still bullish. So I need to wait for price switch from this pullback phase, which was bearish, and switch bullish again, which will look something like this when price break this latest internal high or latest internal low, which was right here. And how I'm placing my entry, basically how I'm placing my buy limit is same as I said. Price tends to retest previous structure highs or previous structure lows. Price tends to retest them. Price really likes to retest them and continue higher from them. So I'm setting buy limit on here. I'm setting stop loss under the internal low or under internal high. It depends where I'm in trend. And I'm targeting swing high or swing low. And that is what I'm trading all the time. That is how I was able to make all the money I was able to pass all the funded accounts. This is the method, okay? If you got all time frames in sync, the probability of you winning the trade is way higher than you losing the trade. So this push on H4 is gonna look something like this on M30. Okay, and what you're gonna do as well, what I like to do is a scaling method, which means when price is still having all the time frames in sync, all bullish, price break this internal high, internal low, what I'm gonna do, I'm gonna set buy limit again. Okay, I'm gonna put stop loss under this low, and I'm gonna put this stop loss to break even, and with all these positions I'm targeting swing high or swing low. Okay, until the swing high or swing low is hit, I can scale on every high low point price is gonna make, because I know what is, let's say, 3 big candles on H4 is a small trend on M30 where I can take advantage and I can basically scale into these positions and make money from that. Okay, so let's summarize it. Daily and H4 for bias, okay, for our main structure points, swing high and swing low. Key levels, which is previous structure high, previous structure low, or some really strong reactions what price did in the past based on some reactions, okay, based on daily H4 and H1. Okay, that's how you're going to be drawing your key levels. And then on that specific key level you've drawn, you're going to be waiting for that lower time frame structure shift. If it's the previous structure high or if it's some key level from the past, you're going to be waiting. And if price is going to give you that M15, M30 structure shift from this pullback, being bearish back to bullish, you can position yourself on the internal high or internal low, place buy limit, stop loss always under the lowest low, under the internal low, and you can ride price all the way to its highs or to its lows. That's it, guys. That's it. That's simple. As I said, that's how I'm able to pass funded accounts, how I'm able to get payouts. It's not hard. It's not hard at all, guys. It's simple. And that's basically what I do. So guys, if you like this video and if you find this video somehow helpful, leave a like, leave a comment. And what I also do, I also offer one-on-one coaching. So if you want to work with me personally, you can message me on Instagram or you can book a call with me. Everything is going to be down in the description. And yeah, let's take our training to the next level. See you.